Hey everybody, Hans Albrecht here. You know the drill. 29 years almost as a professional options market maker, pro trader on the floor, in the pit, and then after that managing about 12 cover call income type funds, downside protect, black swan funds. Just a massive, massive career of being in the trenches. And now I want to bring that experience, bring that knowledge, that art and science to you guys, help you trade smarter with real strategies, especially in this amazing AI-driven world, right? This is going to be an incredible 5 to 10 years where you cannot think linearly anymore. You've got to think exponentially. This is just, everything is changing. Really, it is. This inference phase is much, much bigger than the advent of the internet. The internet was getting a few billion people online. From that crazy, crazy time, we've seen emerge these incredible behemoths that we have today. This is different. This infuses everything with the ability to create insight, to create productivity, to create incredible intelligence in everything they do. It's going to make everybody smarter. AI is starting to get up to the point where it's about 148, 150 IQ. This is a massive, massive turning point. So let's talk about Meta and why I think it's one of the biggest winners out there. We're going to take a look at this inference age, the age of creation. We're going to talk about human data and data mountains out there, which of course Meta has one of the biggest mountains out there. Option pricing. We'll talk about some Meta upside with a little bit of capital efficiency. Okay, so number one, the age of limitless creation. So it's never been easier to create, to innovate, to thrive. AI is really going to let people create almost as fast as they can imagine something, right? This is going to be an influx, a creation of data. That's why I'm big on data companies and a creation of data that we can't even imagine at this point. Now, of course, when you give everyone the ability to create, some of it's going to be subpar, but think about it. I almost think of it in terms of like YouTube. Think about decades ago, how hard it was to be somebody with talent, to get out there, to be in front of an agent, to get in front of a producer, to get a chance to be on TV, to become a true star. YouTube's an example of how they've lowered the barrier, almost eliminated the barrier. Anybody with a phone in their kitchen, in their basement can now become a star. And we've seen that. Zero cost just about to become an absolute star. Some strange stuff out there that gets 1 billion views. I mean, this has absolutely changed the world as it kind of democratizes the ability to show talent. Think about what this new phase of AI is going to be like. You're going to be able to create apps with a prompt. You're going to be able to create companies and websites and everything with a prompt. Almost incredible. It's no longer going to be just some guy who happens to be from MIT or Harvard and has the technical knowledge to create something in his garage that becomes a Microsoft. Everyone is going to potentially be able to be a Bill Gates, a Steve Jobs. Everyone's going to have the ability to do that to varying degrees. And it's going to be amazing. Overnight successes are going to come out of nowhere. And I think that's a very, very exciting thing that we're going to see. Number two, bottom right of the screen here, data, human data in a world flooded with AI everything, AI pictures, AI videos, fake people, fake this, fake that, fake movies, fake music. AI created everything. Advertisers want verified human reach. They want real people. They want real data, real conversations, real people talking about real problems, real successes. Meta has one of the largest real person data sets, a mountain of data, rivaled probably only by Google. That is the moat, authentic human behavior. That is what they are using. They're keeping it to themselves. They are using that to really infuse everything they do. And they're doing it almost better than anybody at this point in terms of monetizing AI and data. So amazing, amazing opportunity for this company. Anybody who has this, you're seeing Reddit. I did a video on Reddit a couple of months ago. I think it's doubled since then. The people are realizing that real is going to be very interesting. In fact, that's made me think lately that sports, that real things that you can sit and watch and know and understand in the moment are going to be fantastic, right? So that's going to really put the, we're going to start seeing sports teams go for $20 billion, $30 billion. The Netflixes of the world that are bringing on real sports, like these are areas that are going to really thrive. Real is going to become very valuable in a world where real becomes a little bit more rare in a sense. Let's talk about one more thing. infrastructure and AI tools, this flywheel that Meta has. It isn't just buying GPUs, they're also building their own inference chips, right? Massive AI optimized data centers, which means this the particular GPUs they're creating, these MTIA inference chips, they're really meant for inference. They're meant for finding the best solutions in terms of reaching people. That's what they do, right? Meta reaches people with ads. They target their ads. That's what these things do. And they're doing it faster. They're doing it cheaper. They do not want to rely on other companies. So amazing tools that they're creating, Meta's creating to let these businesses kind of spin up these creative campaigns very, very quickly. This is a flywheel for them. So remember, massive, massive creation, creating the potential for amazing amounts of ads, more advertisers, better targeting, more revenue, and then round and round and round we go. It's this incredible loop that's going to keep Meta really on top of things. Let's take a look at some of the metrics. Just amazing, amazing earnings per share. Look at this thing go. And all the while, the average PE ratio over the last 10 years, this reflects the last few years, is actually quite a bit above. So Meta's actually 12% below its average PE ratio. Has it had a little bit of a run lately? Yes, but we can see, look at the yellow line, earnings per share. We know that a lot of the money being made is made by MAG, is made in technology right now. So this is a company that has had a good run, but it's not that expensive per se. The PE ratio is in the realm of reasonable, even compared to last year. And for a company that's really going to be enjoying a big part of this non-linear growth that we're seeing, it's going to be a fantastic thing. So now let's take a look at some of the pricing. Okay, so let's look at Meta, a little bit of analysis into option pricing. We can see that we've had a little bit of a run lately. We got a little bit low. Now, remember how I've been saying, I think option pricing is a little bit on the low side considering what may happen in this market. And what I meant was the melt up that I've been talking about for the last 1,000 points. So here we are, it's starting to reflect that, because remember, even upside movement, people tend to think that VIX will always come down as stocks go up and vice versa. That's not always the case. Sometimes you can start to see that upside call skew, which I hope you saw my video a couple of days ago. We talked about that, how we can start to see signs of a mania developing, right? You want to really watch for that to really understand when those sort of animal spirits are starting to really, really kick in again. Because early on, you're going to see signs that there's still a lot of room for that kind of movement. Then eventually you start to see signs of exhaustion, which we'll see at certain points, and that's going to give rise to some good pullbacks at some point. But right now you can see that percentile rank really not that high, kind of averaging around 20, so still very relatively low. But we see that the option pricing is starting to tick up just a little bit, especially as we get closer to earnings season as well. Now, if we go out 6 months, we can see first of all, the term structure, which is basically where our price is along the term structure, very reasonable. I like that it's not getting crazy. So I still think there's, as I've been saying on many of my shows, I do a lot of public shows, I've been talking about how I think that longer term pricing is actually kind of very interesting. And we're starting to see it move up now, right? Exactly what I said would happen is starting to happen. And so we're seeing the beginnings of a mania, or sort of early innings of a mania underway that may indeed continue into the fall. We'll have to see what happens after FOMC. I don't think it's really going to move the needle at all. I think it's going to be business as usual, which quite probably means more up. And so you can kind of see here, as you can see open interest starting to take off again. People are starting to really play things. We can see implied volatility jumping to about 33 from a little bit lower, a couple points lower. So not really reflected in a massive way out to 6 months, because you'll find that those longer term vols, those longer term option prices don't really move as much in terms of the implied volatility. But even look at this 360-day vol. So 1 year vol, and this is where we've been positioning in Leaps Trader, is in some of these longer term ones, right? So we've come from 33 up to the high 33s, so high 32s up to the high 33s. So that's a point there, right? So already, this is exactly what I talked about in a couple of videos. I said, listen, you could win 3 ways. You could win from implied vol going up, which it has here. You've benefited from 1 point of Vega appreciation. And you could win from direction if you've got a directionally delta long trade on. And then you can also see the skew explode to the upside too. So there are 3 ways to win. As I said a month ago, I said there are 3 ways to win on this, and we're starting to see all of those really play out. The delta, the Vega, as well as that that kind of ability for that skew to kind of correct. So very, very interesting kind of scenario that's playing out in a lot of areas of technology. And to me, this says, you know, the horse is out of the barn. Something's going on here. And there's a good possibility that there's a continuation to the upside. So very, very exciting stuff. We can take a look at some of the option prices here. So what would I be looking at? So we can see Meta, we've had positions on. Let me move this over just a little bit. We can see that we're starting to make a move to the upside. The earnings were absolutely phenomenal. We spent about a month just kind of, you know, flailing about a little bit here, bounced our heads off this level a few times, and now we're starting to move. We're seeing that MTI get nice and green again, which is starting to get me a little bit more constructive. So what am I looking at? Even though option pricing has gotten a little bit more expensive, I told you guys a while ago, I said, look, this is going to happen, but we are early phases in inference. We are early phases in the potential for this market melt up to continue, quite honestly. So if I were to look at something like not even a 1 year, sort of June out to next year, you could pick up some high 800s for around 58, 61. So you buy one of those, you control 100 shares of stock for about 61 bucks versus 778 bucks. So, you know, for about 1/10, you can kind of control those shares. Not a massive delta at 37.39. If you want something that's going to give you a lot more punch from a high delta perspective, so something that would look a little bit more like a stock replacement, then you position down into here, maybe around a 650, 660. That's going to be very expensive, but it's also going to give you a nice amount of intrinsic value. It's going to start to act a lot more like stock right off the bat. And then as the stock goes up and that delta rises, you're going to benefit from that as well as probably a steepening of skew at some point. So by the same token that we could see a steepening of call skew, we could see a steepening of put skew as well if we get into those mania type markets where, you know, the whole curve is basically lifted. So hopefully those are interesting to you. Another thing you can do is really to cut down on the cost of some of these trades is you can start to use, we did one on Goldman the other day that's really doing well in Leaps Trader. You can start to cut down on your cost, pick something like an April of 2026, and you can get in there and buy something like an 820 for about 70 bucks and sell the 920 for about 36 bucks. So for about 35 bucks, you're giving yourself that $100 spread of potential to the upside. You don't generally want to create those way out to September or January 2027. You want what we call gamma, right? You want this thing to kick in a little bit more. You're not going to get as much of a reaction if you're super, super, super far out if you do a spread, right? Otherwise, you know, you just want the single call that's going to give you all the convexity you want and the exposure to that increase in vol as you get up there. So hopefully you guys enjoyed that, and we'll see you in the next video.